AXA Investment Managers, it's probably a well-known name, but it's a third-party investment manager under the wings of AXA insurance company. So 1/3 of the assets under management is AXA capital, but 2/3 is for third-party capital, mainly in open-ended funds. It's one of the biggest real estate investors, managers in Europe, focused on Europe, but really a global player. And what describes AXA best is the 360 degrees approach on real assets. Actually, we invest in all sectors, all risk profiles, and all strategies. So equity, but also debt and listed. Focusing on all sectors means that we do invest in the more traditional sectors like retail, offices, residential, but we take all opportunities at hand, and we are advised by internal sector specialists. So we do have a pan-European or even global focused hotel specialists. We have a resi specialist taking also care of the co-living and the student housing opportunities, but also on data centers, infrastructure, and so on. So actually, we are known and well-informed investors in all these sectors. And if I take my role is country head here in the Netherlands. In the Netherlands, our current portfolio consists mainly of hotels, logistics, residential. But we're also looking with a pan-European view to different asset classes like co-living, student housing, healthcare. So interested to follow all these markets.
Great, thank you. Asli.
Hi, first of all, I'd like to welcome you all of you to our lovely Moxie and Residence Inn hotels. We're very honored to have you guys here. I'm part of the Cycas family. We are essentially our hotel operators, and we currently have some 4,000 hotel rooms under 28 hotels and under 14 brands. And actually, the one you are all here today is that this was our very first hotels in Europe. Before this one, we were mostly present only in the UK, and with this one we sort of explore into Europe, and currently our portfolio is pretty much 50-50 splitting soon between Europe and the UK, operating in 5 countries, Germany, Benelux, UK and France. And apart from being operator, obviously we have management agreements, but about 50% of our portfolios are leases, so we're quite open on the deal structures, and I think later on we're going to touch base about how difficult to structure deals on the traditional way these days, and we kind of keep reinventing different structures, it seems to be these days, so we're quite flexible on that respect. And our ambition is to reach 10,000 rooms in about 2 years' time. So I have my Director of Development for France and UK and Ireland here on the back of the room, so if you have any projects, we are very keen to talk to you. And I think one important thing is you can see from this example in this particular hotels, it's a double-decker hotel where we have a Moxie, which is, as you all know, Marriott's lifestyle, funky brand, where actually upper floors of this building is Residence Inn by Marriott, which is the extended stay hotel of Marriott brand. And actually the combination works very well. We operate and trying to operate anywhere you have heads on beds. So currently tapping into a little bit of a student accommodation in Germany, in Darmstadt, and learning our way into that, along with co-working. So I suppose everything becoming a bit more, the boundaries are breaking and everything becoming one under the same roof.
Good, Ron.
Hi there, my name is Ron van Bloois. I'm one of the 4 partners of HEVO. We are a leading consultancy, project management and development company in the Netherlands. And we are totally focused on alternative real assets. So actually in the range of healthcare, educational facilities, like student housing, but also campus developments, because we think it's getting more and more mixed use. And in terms of healthcare, it's from the range of senior housing until to hospitals and nursing homes. And next to my position of HEVO, I'm also since 2012 a lecturer at Amsterdam School of Real Estate on the topics of healthcare finance.
Great, Dirk.
Well, they were colleagues because I'm also a lecturer at that same school. I'm Dirk Bakker. I'm the CEO for Colliers in the Netherlands. 4 or 5 offices, 340 people of staff, 18 business lines, globally 16,000 people, stock exchange quoted. One of the top 4 companies in the world in real estate advisory. And I'm head of Europe, Middle East, Africa for hotels. And also there we're present in all the continents, Europe, Middle East, Africa, everywhere, 80 people. Consulting hotels, brokerage, the full spectrum.
Let's just start with you actually. I mean, if we look at the macro background, which we didn't really pick up earlier, but we've been doing a lot around this in the sessions we've been running lately. So you've got GDP growth, but that's varying across Europe. High unemployment in lots of areas, especially. The change from the summer that you've now got lower for longer in terms of bonds, that we're not seeing the interest rate rises that we're expecting, and a huge amount of capital. So, I mean, just broadly, how do you see that? Do you think that's going to drive, I suppose, more capital, into real estate, but also into hotels and the more sort of alternative sectors?
I think it will. It's as you said rightfully, there's more and more capital coming into Europe, especially. You see a lot of Korean money coming in now. Still, the U.S. private equity funds are all there. Crispijn, a lot of institutional funds are there, becoming indeed more diversified. I think what drives that is more important to see, because we can talk about capital. Capital will always find its way as long as there is a driver to support that. And what we see is that real estate is becoming very expensive. Housing is becoming more expensive. I think for the first time in history, we're seeing that children are not outpacing their parents anymore in wealth growth. And so spending patterns are changing. People spend more money on experience than they spend on ownership. And when you start spending money on experience and housing is becoming more expensive, you will get all these new forms of co-living and also co-experience in multi-use buildings. We see more branding coming in and more lifestyle coming in, more design coming in, all to drive value on buildings, because money, certainly private equity money, that is acquired at low interest rates, and yields therefore don't need to be XX yields anymore. So new investment forms are coming in. So value add will lie in co, in my view.
Good. Okay. Interesting start. And Crispijn, I mean, Dirk there mentioned more institutional funds coming into this sector. You mentioned that somewhere the strategies were beginning to change for an institutional investor like AXA. What's driving that? Is it similar to, I suppose, before, where a lot of the international investors were beginning to take a structural view on that logistics via e-commerce was then going to become more important? Is this also driving not only this sort of, I suppose, more people wanting to travel and therefore hotels, but also moving into this alternative side?
Well, I think currently it's a combination of things, because like Dirk mentioned, yields are coming down because the cost of capital is very low. So the search for yields, in particular on investors, is a struggle. And how can you top up your yield with taking some extra calculated risk to your investments? And one of those risks would be operational risk. And what we see is that in a long word, operationalization of real estate definitely adds value also to more core strategies, which you can divide into sectors, but also into more stronger brands. And I think a brand does, to a certain extent, institutionalize smaller initiatives, and the bigger brands definitely become investment worthy because of that. So I do see a combination of trends pushing investors into more alternative sectors, like you said.
Okay. Yes.
And maybe I can add one, because I think there's one additional driver, because we see more purpose-driven investors, and purpose-driven in terms of making impact on ESG, because I think more and more investors are looking for impact on environmental, social, and governance terms, because I think it's quite important to have a long-term focus, and therefore they are looking to student housing because it's about education. Therefore, they're looking to healthcare. It's about healthiness. So I think that's one of the interesting elements why the yield compression, but also the deal flow is increasing in this alternative business.
Because it plays far more into that kind of... I mean, it's an interesting point because we had probably, I reckon that we had a question about impact investing until this year, maybe once. In all of the other events that we've had, and this year it started out in February. The first events in January it didn't come up at all, but it's come up almost in every single one since. Has as ESG, wellness, those kinds of things, and how they're influencing it. It'd be interesting to pick up with you actually, Asli, that point about brands also that Crispijn just mentioned there, and I think came through a little bit in the presentation in a way, which is you've got those brands, but you're beginning to see, I think, in student housing, although you're getting more brands coming through, actually some of the brands are beginning to make more headway and be more recognised. How important do you think that is? It's obviously sort of recognised as important in the hotel sector, but do you think that in general is spreading into more of these alternative living sectors as well?
And certainly, I think I see what's going to happen in student accommodation is very similar to what happened in the hotel world. And you start the trend, everybody think they can do better or they can do something more about with the local touch they can do in their own area, and they start a brand, and then eventually you will see some cowboy brands, I will call, where that the service is terrible or the product is terrible. So eventually there will be some mergers and there will be some takeovers, some reconciliation, and I think that's inevitable for the student accommodation. In the hotel world, for us is very important because what we see in, I think, the rise of Airbnb, which was great for us as a business, as a hotel industry. But what it also helped us, especially for our extended stay hotels, is that the the lack of safety and security of Airbnb has actually pushed more customers into our residences and stay bridges and etc. with two ways. One is that it opened up the minds of the families and other travelers who didn't know about that they have alternative accommodation to hotel. And B is that those who actually choose to stay in Airbnbs for especially more business purposes kind of start becoming more scared, so they come in our way. So brand there is helping us for compared to an unbranded products.
That's interesting. And I mean, this is for everybody as well in terms of that, because Airbnb has obviously been limited very much here in Amsterdam, and I think that's also true in Barcelona. And I think in Stockholm as well, that it's being limited. How do you see it? I mean, I think it's interesting what you're saying there, because certainly from our point of view, because obviously if we're doing 60 to 70 events a year, we're travelling a lot with that and trying to find accommodation. And initially we thought, oh, Airbnb, fabulous, isn't that great? Until it's cancelled 2 days before, and then there's no room anywhere. So apologies if there's anybody from Airbnb, but I'd just like to pass that on. How do we see that? Do you think that's the influence of Airbnb? Because I think that may also be interesting in terms of other co-working, other kind of aspects that are coming in.
Yeah, well, I think, and that's what you touched on, regulation in general, from an investment point of view, is both a bless and, of course, a curse, because it helps you to follow rules and from an so long-term investments need some stabilization, and regulation can help that. But from a different point of view, regulation can also be quite disruptive when it pops up all of a sudden. I mentioned the rent cap on residential in Berlin, which is an issue now that does impact investment. So, and regulation is very location specific. So here in Amsterdam, you said rightfully that a cap of new developments and a cap on Airbnb use is, from an investment point of view, it's definitely blessed.
Can I just comment on that also? I mean, Airbnb is a discussion that's been going on for 5 years now. Airbnb is here to stay. It will stabilize everywhere at a percentage anywhere between 12 and 14%. It will not go any higher. There's no room for it because it has a very serious social impact. So what it has done indeed, it has matured and it has focused and forced focus into the hotel industry even more. The biggest problem we have in the world today is a different one. It's the rise of tourism. It keeps on growing, and make no mistake, the fastest growth in the Netherlands in terms of hotel rooms being built is in Amsterdam today. And hotel moratorium or not, there's 7,500 keys being built as we speak. So the end is not there yet. The problem is that tourism keeps rising in the Netherlands at a pace of 6.8% CAGR, compounded annual growth rate. And that will go on for the next 10 years. So the Netherlands needs to have a national policy on tourism and on growth. And for the hotel industry, they need that too, because at the end of the day, Amsterdam, there will be a limit to growth. So where are people going to go? You see Rotterdam rising, you see The Hague rising, even Leiden, even Deventer now gets a new hotel, you know, with a branded Holiday Inn Express is coming in there. So all these areas are going to, you know, at the end of the day, the Netherlands is one big tourism pot, and it's growing. And there is no end to it, because if you realize that, correct me if anybody here who I'm wrong, but I seem to remember somebody that only 2% of the Chinese have a passport today.
Can I add something on that? And as an operator here, operating hotels in Netherlands, the downside of this also for us is we can't find staff. The GDP is growing, so economy is growing, everybody has money, unemployment is 3% in Netherlands, and to find staff to run our hotels, I never seen anything like this. It's the most incredibly difficult thing, because if you try to even bring from outside, they can't come because accommodation is so expensive, even if they have the right to work in Netherlands from a different European city, because of the lack of affordable housing and all that, they cannot come. So I genuinely believe that we need a stronger regulation. I think every investor and operator already made their money and returns in Amsterdam. Let's give a breathing space to the industry here.
We just heard from Samuel that 40% of the students that come here stay here. So, you know, there's your solution already.
They don't want to work in hotels.
Make it more attractive. Good. Let's because we want to look at a little bit of the outlook for 2020. Let's also just have a little look at 2019, and just for your sectors, just give a very quick kind of 1 minute on what you see as the biggest changes that you've seen over the past year. What do you think are the sort of most important changes, Samuel?
The need has changed. The need is not for capital or for understanding like it has been so far, but the need is for opportunity and the right partners. So I mean globally, it's not only Netherlands. So to find opportunity in Italy, for example, or to find a partner over there is about 2 billion looking at Italy, and nobody's building last 3 years. Seriously, there is some projects here and there. There is a demand from students, demand from capital, demand from cities, but there is lack of opportunities, because that particular stock that is suitable for student housing is not so easy to find. It's not as easy as office, or you have to have very thin buildings, many windows, 20 minutes from city, 20 minutes from university, so it's really hard to find.
Okay, good. So in a way, there's things capping that demand, really.
Well, as I mentioned, it's difficult for me to pick one sector because I do cover all of them. But there's one main theme that saw some extra speed this year, as markets are quite open and peaking out currently. Then mega trends try to increase, And as Dirk said, one of them is ongoing globalization, and that goes really fast. And whether it's tourism or international students or logistics or digital infrastructure, there's a few trends there which enable investors to invest through the cycle by picking up some of these mega trends. So that quite adds up to the topics we were discussing until now as well. So I think I'll leave it to that.
Okay.
May I have one more thing? One more thing that is happening in this asset class that probably relates to the hotel that I'm not expert, but our colleagues are, is lack of operators. That's something you mentioned, that whether this student housing, micro-living and co-living are moving to something that is in hotel. Will we gonna have student housing Hiltons? That's a question. I'm not giving you an answer. But if lack of opportunities, I mean, particular plots and buildings is one of a problem that has changed dynamics in 2019. The other one is lack of independent operators, and that there are many different reasons why, but that's a hindrance. If there are more independent operators, the sector will move faster.
We'll be very happy to help you. Just come to, because we already started. But I think in 2019, if I split between Netherlands and the rest of the world, or Europe, sorry, in Netherlands it was impossible to sign a deal. It was literally, if you wanted to sign something sustainable or decent, it was almost impossible, at least in sort of in and around Amsterdam. Hence, we kind of put our creative hat on and went outside to see where else we can, and hence with our partners going to look into Deventer. But I can't see any reasonable lease deals or anything similar to be able to done in Netherlands, or sorry, in Amsterdam for 2020 either. What was seen very great change in 2019, rest of Europe, is that creative deal structures with the institutional investors. What we see in the difference is that maybe AXA was quite unique for a long time about being less institutional in their deal structures, but especially with the German or the French institutional investors, the fact that they cannot squeeze any more yields out of it, they turned to do many creative way of hybrid deal structures, from in France, from location gérance to in the rest of the Europe, 100% variable leases, where the low permits, and that's been extremely helpful for us, for companies like us, where we're trying to do sensible deals with a long-term. You know, I describe Cycas type of deals where we're signing deals to stay, not to sell. So therefore, longevity of that lease we're putting down on the table has to have pass all the asset tests. And although we would love to believe the market is going to grow year on, and those people who are start paying 20 to 25,000 euros per key per year leases around Amsterdam, we can't see that. So we are very excited about the open-mindedness of these different capital sources into the deal structures in Europe. So we will sign quite a few of those for next year.
Okay, good.
Yeah, when you look at healthcare 2019, I think you see an increase in deal flow. It rises up to 1 billion for the Netherlands, for example. But it has actually two phases. I think we've got a more residential side, so we talk about senior housing, and we talk about the more severe nursing home side. And I think it also attracts two different type of investors, because the senior housing is about individual rents and no master lease, and the nursing home is about making a deal with an operator. On the operator side, we see consolidation and also globalization, because you see some French and Belgian operators are coming to Netherlands, Germany, UK, Nordics, and also the investors are going global, because US investors are looking to Dutch healthcare. So it's the same development like Crispijn told before. And I think there's also a new asset class coming, and that's actually the core educational real estate side. So when we talk about student housing, that is one, but we also see some attention from universities who would like to make a deal with an investor concerning their core real estate. So it's quite a new asset class, so food for thought.
Do you mean in terms of development, or are you talking about kind of sale and leaseback sort of?
Both, yeah. So indeed, I think it's, when you also look at 2019, we see also an increase of portfolio deals. So it's both the challenge to redevelop the current portfolio into state-of-the-art. And universities are also concerned about their balance sheet. So it's quite difficult to redevelop their current portfolio, and therefore they need investors. And they're willing to sign long-term leases, so it's interested for investors.
Interesting. I think I'm always, you're sitting at the last at the table, it becomes very easy. But it's, no, but I see two changes.
You just rubbish what everybody else is.
It's all rubbish, guys. This is added all up. No. The biggest change that I've seen is actually there are two things. From a business perspective, and certainly from the hotel space, where we always used to talk about price per key when you talk about the value of a hotel. There I see a major shift in the last 12 months, shifting it to revenue, or EBITDA, if you like, per square meter. Because at the end of the day, that is becoming very important, and the mixed use component is driving that. The second thing is consumer-driven, so not that was the business-driven side of things, the consumer-driven side of things, and that's where the match is the paradox basically of internationalization, what we're discussing here. And so at the end of the day, I'm saying that 3 times in a row now, at the end of the day, what one is looking for, but new travelers, millennials, digital natives, whoever you want to call them, are looking for individualization, they're looking for experience, and that experience is created on a local level, but consolidation is already taking place where localization is becoming internationalized. So that's the consolidation that is going much quicker, and that's also driven by that search for EBITDA per square meter. So the cheap money and institutional money is looking for security, and security is delivered by an experience that is consolidated. And that's the thing that I've seen happening, and I see that happening in the next 5 years going forward as well.
Is this also about wanting to get a more like a bond-like return? Because obviously bonds are not producing anything for capital at the moment.
Don't think so. I think in major cities, when you hit the bottom, there's a hotel that's been sold in Amsterdam 2 weeks ago at a 3% yield. How low can you go? You know, it's at the end, before you start making money, it's got to be a long hold in order for it to make money, or there needs to be an upside in revenue, because it's certainly not going to be an occupancy. So, but there's other cities as well. I mean, there's cities like Haarlem, like Deventer, like Zwolle, like all these kind of places where you can still put your money and where yields are more sustainable. And I think you will see that happening. In Germany is a very clear thing. If you look 10 years ago in Germany and you look today, you see that there's less hotels, but more hotels per key, of key per hotel. So there's a larger spread coming in, and larger boxes, larger experiences being created. Same in France. You know, France has been so far behind on modern product, and now the French have a lot of modern product and they're trying to deploy it. So more experience-based.
I'm interested also in what you said, Asli, before, which was about that blurring in a way of these different products. So you've got, I mean, Samuel, you started out looking at student housing, and then it's merged into also looking at micro-living and co-living. What's the difference between micro-living and co-living and long stay and student housing? And I mean, how do you see that? Are we all actually involved in the same thing? Is hotels blurring into some of those other areas?
Exactly. I think it's, the way we live our life is so much different actually, or the current generation living their life is so much different to ours or the previous generation. It's all about, there's the two elements. One is, I can't remember who mentioned about it, but they don't like owning anything. It's a spend culture, or investing in the moment. Whatever they make, it's investing in the moment. Therefore, they don't seem to invest in any residential units anymore. And therefore their trend's gonna start, which is at the moment, it's in different formats, but the whole life cycle, what they start is a student living at university. Then as soon as they got their first job at PwC as an intern or in whatever company, they go into micro-living or co-living. And then when they get their middle management position and they go around the world for their projects for 3 months in States and 3 months in Australia, they're going to be staying in residence inns and stay bridges like of brands. And then when they become older, and then when they become an executive, they're going to be staying in married residences or Hyatt residences. And then afterwards, they're going to end up in this posh Soho House-looking senior living. That's going to be their retirement until they end up in a nursing home. So I think all these different elements we're talking about today is going to become the life cycle of the next generation, I think. Well, I mean, I can put my pennies there, but I don't know if I'm going to get any return. Yeah. So yeah, so we all becoming, heads on beds, becoming all under one blurry line under the roof.
Okay, good. And Ron, how does then healthcare fit in with that? Because I can see how senior living does, because in a way that's a similar product to a lot of these others where people are maybe downsizing from a large house into a smaller area. But how does that fit in with healthcare? Because obviously you've got much more of an operational aspect to that, particularly with care homes and health.
Yeah, therefore I don't totally agree with you, because it's not a total grave. It's not a total spectrum, to my opinion, because you don't want to live next to someone who has Alzheimer's, or so you're not a student next to. Huh? No. I didn't put them under the same roof. No, not on the same roof. Yeah, so. Not the same roof. Yeah. Okay. Great. Yeah, because for example, when you look at healthcare or actually the seniors business, we see really a separation between senior living and senior housing and the more nursing home side. And I think it's also interesting because it's on one hand a consumer demand, but it's also driven by the investors, because investors are also, well, actually in general, they are quite lazy. So they like a long-term lease and individual payments and doing business with individual customers. You don't agree? Oh, well, I think some investors have to shift their business too, because they are organized on the way to do business, and I think this will be a very interesting question, whether we can align the developments from consumers into the capital markets, because I think they don't match totally towards each other. But maybe there are some reactions.
I think Crispijn and I agree. No, look, listen. Anything when there is change can only be driven by alternative investors, and that's usually private equity, because institutional investors by nature only invest in proven concepts. So there is a lot of private equity in the market. Money is relatively cheap, and operational models will become the name of the game more and more and more. Eventually, out of operational models, there will be more lease-driven models when professionalization and when third-party operators like Cycas become more accepted, and that will happen in healthcare and in all other asset classes as well. So there will be a shift, but there will be waves. But change is driven by outside agencies and by private equity and not by institutionals.
We agree.
Well, I do represent an institutional investor. No, it's very tempting to put all investors in the same corner. Like it's very tempting to put all consumers in the same corner, but we're not alike all. And so I have to correct two actually of the statements before. From an investment point of view, it's liquidity is very important. So it's not per se the long-term stability that you have 3% today and you have 3% in 10 years, because your tenant can go bankrupt in the meantime, then you have nothing. So it's always about, from an investment point of view, it's more, you don't look for security per se, but you look for a downside cushion. So currently we're in a low yield environment, and when the market goes down or the demand goes down, you want to have some control on cost versus income, so you remain cost productive. And that is for hotels. So of course you can say something about long-term leases, whether that is a viable business model, but on the other hand, invest in management contracts where you are in the business yourself and control that on an almost day-to-day basis. Provides you a way more resilient investment model than what was described earlier.
Maybe also when I saw the presentation of Samuel, you saw the actually doubling of deal flow in student housing in the US 4 or 5 years ago. Do you know what was the main driver for this explosion of deal flow? Was there a specific development or legislation, or what was the driver behind it?
Well, the pattern we can see is usually that asset class has got certain level of awareness, transparency and trust, and which attracted enough investors, developers, operators. So it's a certain tipping point that enables to that influx of capital and appetite to confidence, transparency. So that seems to be same in the UK, and it goes up until a certain level, which is about 30% provision rate. And once it caps because the purpose-built student accommodation is solution only for so many student customers. Not everybody will. So not everybody would opt for it, even though it has golden doors. So yeah, that's the tipping point. But I wanted to comment on this merging of the asset classes and how we're gonna live. I think first of all, the world becomes mobile, increasingly so. So people are more mobile because they have less barriers, so less language barriers, less visa, less. And it's gonna sound terribly, but I have to say, they're getting married later, so they're more mobile. They have a mortgage 5 years later than their parents, so they're more mobile. And it's not only that they have less obstacles or less barriers, but they have more motivations to go abroad, job, experience, etc. So this all increases the mobility of the planet at all age levels. And then it forces people to rent at all age levels, be it student, young professionals, in later stages, and even seniors. Then it's community. So people, or the mankind always tends to create some community. So from mobile to rent to community, this all will create probably what we see in these segments. And I think in 2025, maybe 2030, we will not be talking about alternative rented residential asset classes. It will be altogether mainstream and normal, like it is normal to rent for 85% Berliners, you know, and they don't buy. So I think it will be sort of new standard. It still will be alternative asset classes, I think. But, and that partially answers the question, I think the more it keeps its own identity, the bigger chances it has to develop. So student housing is student housing. And if student housing becomes hybrid, it has different potential investors, it has different location, different operation, different marketing, different cost of operation, so different profit margins. So not to say that it will be more difficult to find partners for that or capital. So I think that not like we will not have mixed products, but I don't think that the seniors will live with students, or that young professionals will ongoingly live with tourists, you know, and that this will be sort of it will merge to one asset class. Probably, when, as I probably I finished with something that I already said. Student housing, as it developed as a student housing, is now 1 million beds. Co-living, okay, it starts, but it's 23,500 student beds. So if it keeps its identity, it has more potential to boom and grow.
Can I just clarify? I think there's two people who got me wrong. So what I was trying to say earlier on, the blur between the concepts or on the accommodation types are changing. I never meant to say that the student housing will be under the same rule of senior living. But what I'm trying to say, it's not too far from now, maybe in 5 or 10 years' time, what we will see is that Accor has a student housing brand, then have their own Accor co-living, then of course they have the Adagio and all that extended stay, and eventually you will see in different buildings, this is all taken, a private residential offering, which is a bit high-end, and then maybe retirement homes, but not under the same concept. However, just to touch on that, and because one of your questions, preparation, was the multi-unit or different usages under the same roof, we end up with a massive 20,000 square meter, roughly, property in Darmstadt, which is in Germany, which has the 2 largest technical universities of Germany. It's the home of all the German telecom-related matters. It's also European Space Agency, satellite agency, everything is there. It's in only 20 minutes to Frankfurt. And we have in this building that we inherited as 320 odd keys, and it's a combination of 5 buildings, 5 blocks, but they are all interconnected. So it was silly to make 327 key lifestyle hotel. So we kind of are splitting, and we're doing at the moment as a 200 key lifestyle hotel, which is usually target market is between 25 to sort of 35, and then the remaining of the keys we turn into student housing, because there are lots of mature students who are coming into this technical university, so they're usually the postgrads or doing some research based, and for us it was very different services we can provide under the same roof, but those two concepts goes well together, and we took 2 floors and converting into co-working space, because just the nearby demographics and in-house demographic we have is technical, is IT, it's telecom, and it's space. So these are all startup routes, and we have a very large conference area, which all of them can benefit in different ways. So we kind of merging some of the concepts together under the same roof, because they become a hub actually for the same. They have all same. Interest in one way.
It's interesting, that whole mixed-use area has come up a great deal in all of the discussions pretty much this year as well, including hotels going into shopping centres, going into all of a lot of changes around that area. Dirk, just from your side, because you're looking across all of the asset classes, and obviously you've got here in Holland, and then it's grown. Is growing across Europe. You've got the student hotel, which is an example of student housing and mainly tourists actually. But so you have got that merged in one particular building, that brand. So do you think you will be able to have that sort of crossover brand as well? Do you think that will happen in co-living in other areas, or?
Probably will. I mean, there's no reason why not. I mean, I think everybody's said it already. Yeah, I mean, there will be blurred, and the lines will be blurring. There's a good example already in the Netherlands. In London you've got several, but in the Netherlands, in Utrecht, the North building basically is a hotel. It has retail in it, it has apartments in it, it has healthcare in it. It's all in one building, and it's adjacent to the railway station. So it's very much location dependent. I would think. I think transport hubs are becoming more important. Infrastructure is critical. There's no reason why that should not happen. I mean, we can get carried away on this topic because you can get so many examples. We've heard so many already. For now, it's not happening. A little bit is happening, but it's not institutionalized. But I don't exclude it will happen. Yeah, why not? I mean, the same thing. Just look at offices. I mean, offices are now becoming branded offices. I mean, the office where I'm sitting in is called the Garage. I mean, when I say I'm still starting implying this is still known better than the Garage, but it sounds different. It sounds different when you're sitting on my offices in the Rock, or when you say it's in the Pilotenstraat 34. You know, that's that whole branding issue. Branded offices, branded buildings, branded housing, branded co-living is the name of the game. It will happen. Yeah. What can I say?
It'd be very different if I said I was working out of my garage.
I'm actually working out of my garage.
Very large garage.
Very large garage.
Yeah.
Very funky garage.
I wanted to come back a little bit also to the, because ESG, wellness, all of those aspects, authenticity has come up a lot at MAPIC, for example, where we were last week looking at retail, but also that if for these brands to be relevant to millennials especially, and this may be the case with Moxie, it'd be interesting to find out, is that sort of authenticity, the fact that you need to know where the food is coming from, you need to know everything you can about the brand, because otherwise people will not stay there. Do you think that's going to be, is that already true? And is it for hotels? No, not relevant.
I mean, I think, yes, that's a trend. Well, I think that's a fad rather than trend. People like to display all those on their Instagram pages and Facebook pages, but in real life, whatever sandwich or salad they can get is getting majority of the population. Of course, you have certain people are really dedicated to those things and search and ask for it. And look, listen, we as hotelier operators, of course, we're looking everything to be sustainable, from products we're serving or how we're building our hotels. But at the moment, we're not losing any customers because we're not 100% organically built and homegrown chickens and eggs in the properties yet. And I don't see that happening for the next 10, 15 years.
Oh, yeah. Dirk's got a different view. I think we better go to Dirk.
Well, look, listen, there's going to be certain level. Well, the world cannot produce it. I mean, either we're going to go into a completely different level of production, and of course we're following the fake meat. That's going to be the biggest game changer in the industry. But when I talk with my friends who are actually working in that industry for a global production of this, they are nowhere near. There's at least 10, 15 years. And a lot of other vegetables to grow under you in the basements.
That's
every university has a different view.
It's a detail what you're talking about. I mean, look at what's happening today with the carbon issue.
That's
You know,
different.
but that's what we're talking about. I mean, the whole regulation, the world's getting overpopulated. I mean, carbon, how do you call that? Carbon exhaust is a major topic that is going to drive change. The Paris Agreement is the main benchmark, and we are going to have to do this. Banks and financial institutions will not fund anymore in 5 years' time. If you realize that 90% of the data available today in the world has been generated in the last 2 years, I can't predict what's happening after the past 5 years anymore. And that's the world we live in. The change is going so quick, and the demand for authenticity and the environmental responsibilities that we have are going to drive change in this industry and in any industry. I'm convinced.
It's a very small percentage. It's only going to happen and lead in Europe. For if you want to add Africa and China and America, they are far, far behind. They're not even accepting Paris. Right. And that's what's...
Don't agree.
Well, I hope.
No, and I agree with Dirk on this one. It's a trend, and everybody in the audience has its own view on that. It's a trend not to be stopped, and of course you have to be careful on greenwashing and storytelling, which is only part of the equation. But it's of imminent importance, both the environmental, but also the social and governmental part of the ESG.
Well, I didn't say it wasn't important. I said it's not going to be global for another 10, 15 years.
But it is already.
But they're not stopping in the production of meats or supply in the hotel. So the question.
And that's the tail end of it maybe. But there's one major thing you should look at. Look at Portugal. Portugal is a great example. You cannot build a building in Portugal anymore for the last 5 years unless you use an old building and 100% of its materials. Now that is a major game changer that nobody saw coming. And meanwhile, it's completely a circular construction country. And that's going to happen here. And it will not take more than 5 years.
It's already happening with one of the
there you go.
startups
Yeah.
here.
Well,
Yeah.
there you go.
The question was about the products, the foods, the originally. So we're far behind on the products. In the building, we don't build any buildings at the moment in all of our contracts for BREEAM. Excellent.
Mm-hmm.
And for example, things we can control is carbon footprint in a travel, and buildings. Yes, it's today, and it's already a decade too late. But in going into the question of what are the things people are buying to eat in the hotels and service, we're not quite yet there because people are not aware there yet on that there are bigger issues to solve until we get there for another 10 years.
It's quite interesting because you see, and I think Amsterdam, I read somewhere, but this might be completely wrong, but that Amsterdam, if there were any city events, then meat was not served unless specially requested. And there was a small thing that was in the news in the UK over the summer, which was that one of the universities had banned meat products from all of its university cafeterias and restaurants because of, not because of animal cruelty or because of that, but actually to do with carbon reduction. So I think it's going to be an increasing point, definitely.
I think the government just proposed something in Netherlands. I think they're going to ban 130 kilometers per hour, going to become 100 kilometers per hour for carbon emission because they're not meeting their carbon, well, the way it was published on the paper, it's because they're not meeting their carbon target.
So carbon standards.
Good. Let's just pick up on a couple of small things. Just in terms of, you mentioned availability of product. Is that true for all of these alternative sectors, that the product simply isn't there, and therefore you've got to develop it? Is that the situation?
Well, maybe first from the healthcare perspective, I think I agree, but it's also there are some possibilities in the sale and leaseback side. So there is product, but there's current product.
To respond, of course, there's a lot of money available, but not enough land in the end to develop all. And I think Asli is right that she doesn't find any development projects because there's a ban here in Amsterdam on new hotel developments. So there's quite some under construction still, but there's regulation in that sense. And I don't see from a regulation point of view, but of course there is a search for land, so therefore it is difficult to find new product, and therefore old product is being rebranded, and that also leads to new opportunities. So the scarcity is relative, I think.
In general terms, it looks as though we're going to be, whether that's driven by additional travel, whether that's more international students, that it looks as though we're going to be in a growth phase for the majority of these alternative sectors, by the sounds of it, and the hotel sector. Is that the case? Do we see, I suppose, is it all blue skies, or are there challenges to that?
I think from economical perspective, it's still pretty sustainable. Environmentally, yes, not, because every time somebody flies, it's again doesn't help us to survive. But I think in many countries, it's not gonna RevPARs and returns are not gonna double in the next coming years, but they're gonna stay where they are. I don't see a immediate market adjustment. Probably for Netherlands, still the uncertainty of Brexit may affect the export business and therefore some effect into GDP and economy, but it has such a strong build up to this day, it can absorb probably. We'll see what happens with China and that trade, but from the sentiment and people's money spending habits to investors' appetite to buy, currently probably for 2020 there aren't any alarm bells, except God knows what will happen to UK.
Yes, well, we'll all be watching that.
I think there are alarm bells. The biggest alarm bell that we have is politics. The regulatory insecurity, if you look at the Amsterdam City Town Council with their regulations, and I hope there's somebody here in the room that is from the Amsterdam City government, because I'm happy to attack them.
Not physically.
No, I mean, no, I just want to be, I'm pretty clear on this. I think regulatory issues are a problem. We're dealing with populism these days. That means that we're getting much more political. As I'm the CEO of Colliers, I've got to be very politically correct, which I'm not always. But I think the regulatory issues are of major concern. I mean, the people are basing themselves these days too much on emotion and not enough on data and not enough on fact. And that is causing problems. Look at the housing rules in the Netherlands. They try to come with that 40-40-20 rule to stimulate middle class being able to live in the canal area, so to speak, if I put it very blunt. And the contrary is happening. There's not one house being built anymore. And meanwhile, Patricia and Blackstone are buying canal houses up and renting them out. So the adversary effect is being achieved. And I see that on a national level happening because it's too much compromise and not enough clarity, and that is driving us into a direction where Twitter is becoming more important than the Central Bureau of Statistics. And that's an issue, and I see that as a concern going forward.
Well, perhaps when you look at healthcare, aging demographics are booming, so that's a fact. And I think it's roughly 25% of the total inhabitants when you look at the aging population. So it's a crazy amount of numbers, but it's not only blue skies, because I think the affordability issue is the most important thing. So when you look also at the rental side for seniors, well, there are not a lot of people who can spend more than 1,100-1,200 euros per month for an apartment of 55 square meters. So that's also an issue, but I think it's also in general a competitive issue between normal residential and senior housing, because in the end it's also about I'm a developer, and shall I develop a residential building or a senior housing building? So therefore we also need actually some regulation to actually make some senior facilities in the region. So I think we should develop some sort of regulation to actually make enough facilities for senior housing.
And it's interesting actually that, Samuel, in your presentation you mentioned that one of the key points actually for markets growing was where government, not just local, but city and also national government actually had a policy in order to try and attract more international students, which is quite interesting, because it would be interesting to see whether that kind of thing can happen in Amsterdam over and above teaching in English and things like that that do make a difference.
I would generally expand on what Dirk mentioned, but I think that the general threat, as to answer your question, is that when be it politicians or investors or any other stakeholders base their decisions on rather emotion or fashion or some kind of a wave of certain interests rather than on how did you mention statistics or basically reasonable levels. And we see this kind of a threat in asset class like student housing or micro-living, like what I mentioned in Australia, that there is a super expensive product, very strong pipeline, there is a certain hype, and then there is a threat that the product that comes to a market will be based on what is on demand now, not what will be on demand later. And we see the same here in the Netherlands. There always needs to be a 5-star product that we see in the market, or a 3-star product that is for many people, but we don't see much of a 4-star product here, And I think that's the challenge or a threat or potential downsides for these alternative asset classes, that they will go too much on a how do they say, don't die on your own supply, that they don't measure it, they don't make it in a moderate fashion, in a rational fashion, and therefore we build the wrong product, and that's the last thing you want to do in real estate. That's not changeable that easy, you know. So I think that's sort of a threat that people will not deliver the right product in these alternatives. But otherwise, demographics, interest, counter-cyclical, that all plays very well. I don't see a downside there. The only potential threat is in the wrong product that is not based on rational decisions.
I've got a question.
Yeah.
I've got a question about the product. So do you think the product will get a little bit more flexible as well? So looking at what is happening to real estate with residential side, student housing, co-living, right, and this new extended stay in hospitality. Do you think real estate is gonna also start to change into like this more flexible pop-up, maybe in the beginning, MVP, moving towards more stable model?
If you want, I'll answer a question if you want. The answer is wholeheartedly yes, because change is not driven by developers or by investors. Change is driven
That's it. That really does mean it's drinks almost.
by consumers. Consumers are driving change, and there's one thing that I see as the biggest change. Actually, the third one that I asked earlier. One of the other things that I see happening towards the future is developers will no longer start developing something and then find tenants. Tenants will drive that change. They will ask for a certain experience, and then developers will build that purpose-built. That's something you will see happening a lot. So the answer is yes, and come up with any creative wish you have, and it will be fulfilled in the next 10 years.
Interesting, but do you think also that investors will change?
Absolutely, investors will always follow as long as there is a business
Demand.
model and there is a downside risk protection somewhere. Investors will follow.
Good. I've got a quick last one just before we break for drinks. So if we're looking at the outlook and investment strategies, what's going to provide the best returns in your sector for 2020 and beyond, I guess? So you can either choose the Netherlands or the European market, but what do you think is the best strategy in these sectors?
I think I would have to answer that one by saying
Put it on red. No, go on.
What will provide the best returns? Anything that fulfills a consumer's wish. And so that's a very broad answer, I realize that, but hotels will always be there. Different hotel forms will always be there. Revenue per square meter or EBITDA per square meter is critical. So big hallways that don't provide any returns are past history. Yes, it will have a feel of luxury, but you will have to make sure that once you have a customer in house, that he spends more money than just on a hotel room. And any model that sustains that is a sustainable business model going forward.
Yeah, I would say, well, go for the outperformer on ESG. And I think this is the mixed portfolio of healthcare.
We're going to see in our special focus, and what market going to see next year is the upcycling the assets. There are lots of assets, especially in France and Germany, that are outdated, and that's where the only value that we can find today is take over, renovate, rebrand, relaunch with a better commercial structure. From an operator point of view, that's where the market is for us and for our investment partners. It's certainly not ground-up developments.
I think picking hotels or student housing, but like I mentioned, the operational, it's difficult, it's a tongue twister, but the more operational character of investments definitely provide the best added value, and therefore within those investments improve the cross-selling or the improvement of food and beverage or room rates. Would definitely, so to add value to the operations would definitely be the best aim for investors from my point of view.
I had the most time to think about. I will answer from two different angles. First, I think what will mostly influence what will happen next year is beyond our control. We cannot influence it, we can read it. It's politics, it's end of a cycle, it's the customer. So we cannot influence it, but we can learn about it. And once you read it well, we can do well next year. From the more practical point of view, I think next year we all will be more careful, and therefore going from a broader, sort of a shotgun approach in our asset classes, or less so now, we will be even more rifle, and looking for particular countries, cities, spots, districts, and we will be more selective. So people will probably not invest less, but will think twice.